Rose, Longwood Currency Trading. Good morning. It's a cold morning this morning. I wanted to chat a little bit about psychology as an element in Forex trading. Now, this was suggested by a viewer. They wanted me to chat about this, and I think if you go back through the body of my video, all of my videos that I've done, this is my 78th video or something. I don't know what it is. But I think if you go back over that body of work, psychology is an essential component of all of my discussions, because we're traders. We're just not pushing buttons. It's our personalities and all that stuff that interact with our trading that makes us either a good trader or a bad trader, or making good decisions or bad decisions. And if you've seen my earlier videos, you can see some of the stupid decisions that I make and continue to make. And they're not technical issues. They're letting my emotions or my psychological frame of mind screw up what turns out to be weaknesses in the particular rule structure that I have, or whatever it is that makes me do stupid shit. I blame it on Ed up here that sits on my left shoulder, the little bridge troll, and he whispers in my ear and he tells me to do stupid shit. I blame Ed for all that stuff. And I blame Ed for listening to him. I don't take any culpability in that for myself, because how stupid would that be to let a trade run beyond comprehension to margin or something like that, or not having respect for the money, or whatever delusional thing that we all do as traders. I think the biggest hurdle that we have is overcoming our psychological weaknesses, and we all have them. Now, I think that Mark Douglas's book, Trading in the Zone, is the classic on this topic. I'm not going to tell you anything new that Mark Douglas or any number of other authors have. I just point out Mark Douglas because he does the best job, in my opinion, and also in many others, because it's considered a classic in the genre. Trading in the Zone. If you haven't read it, probably nothing I'm going to say here is going to make any sense to you. I didn't come to Douglas's book until probably 2015, and I had done enough things in my past life where when I read his book it all went, oh, I get it. If I hadn't done all those things in my past life and made all the mistakes that I made to come to that point, but instead, if I had Mark Douglas's book back in 2000 when he wrote it, I wouldn't have made a lot of the dumbass mistakes that I made in, they weren't mistakes in real estate. You make a lot of mistakes no matter what you do. Driving a car, you make mistakes. At least in real estate, you have time to correct the mistake, and you have a lot of different ways of mitigating that issue. What I came to find in currency trading is that you have no time to do that. If you make a mistake, you're fucked right away. The only thing you can do is get out. And if you don't have control over your emotional structure, you won't get out. You'll sit there hoping that the price will come back. The things are so interrelated. The psychology and the mechanics of trading are so interrelated that you simply cannot even dream of being a currency trader without, or even a stock trader, commodities, because his advice is generic to the financial markets, and to a certain degree to real estate as well. You just can't involve yourself in any decision process that involves hope, fear, and greed without understanding psychology. You just can't. And I wish I could have learned that connection sooner. I knew it as a component of who I was as a person because of my martial arts background. I started studying karate in 1968 when I went into college, and that's all about psychology. And at the time that we're dealing with psychology, we also dealt a lot in philosophy and meditation and all that stuff that a good martial art encompasses. And there's a lot of shitheads out there that teach punch and kick, and you know, that's the extent of it. And that's fine if you want to compete in karate and you just do karate. In that realm, I differentiate what I do as martial arts as opposed to karate or judo or whatever it is. You know, you have self-defense training, you have karate or judo or whatever, which takes the self-defense to the next level, and then you have martial arts, which encompasses any fighting art or combative art, even financial studies, combines the physical thing that you're doing with a philosophy and a psychology component, a meditative component, other study components that you have. So I had that background, and so I didn't screw up like I saw a lot of my other friends. I saw people lose hundreds of thousands of dollars in real estate. And you might say, well, you have to be really fucking stupid to lose money in real estate because real estate always goes up. But it doesn't. You know, about every 10 years, I've been through 6 of these economic collapses in my investing career, and real estate goes down anywhere from 20 to 70 or 80%. And so you gotta have a grip on your emotional structure, which has guidance through your psychology, how you psychologically have psychological control, I guess, over your emotional states, because otherwise the emotion is going to get the better of you. The psychology helps you understand your emotional makeups of hope, fear, and greed so that you can deal with them mechanically within the context of whatever pursuit that you're doing that would require that sort of analysis. And look, just about everything we deal with deals with hope, fear, and greed. We hope something happens, we're afraid of it not happening, we're greedy that it happens, and more often than not, we juxtapose when we should be fearful with greed, and we juxtapose when we should be greedy, we're fearful. And Warren Buffett talks about that in his stuff. So I'm not going to be able to add any new insights into the psychology because I've been studying this stuff for 50 years, for God's sakes, and I've been applying it in different disciplines: classical guitar, stock investments, options investments, real estate, learning to sail. I mean, it's all inclusive within my life, and as a result, I've been successful in many, many, many different things in my life because I understood these things. If you're coming into trading and you have some smattering of experience in studying psychology, hopefully maybe a little meditative experience or a little philosophy to balance right living and right thinking, what the Buddhists would call that, and then all of what Mark Douglas would say makes great sense to you, and that's going to help you in whatever pursuits it has beyond your trading. The key psychological element, I think, in trading is applying your psychological makeup to your personality, or as your personality, to the time frame you trade on. I mean, that's the first step that you have to take. I don't have a very patient or tolerant personality. If I see something that I want to do, I'm going to get in, I want to do it. If I want to go sailing, I'm not going to sit there and read about it, and I'm going to get on a boat and I'm going to go, or buy a boat and go. If I want to get to the grocery store, I'm just going to get in the car. I do things, and so I don't have a lot of patience for people who say, oh, gee, I'd like to do this, and then, you know, 2 years later, hey, Bob, did you ever get around to that? Well, no, I've been busy. Show them the hand, and you know, that kind of thing. Now, that does me very well. It's created a lot of success for me in my life. I mean, I used to joke that I could go out and buy a piece of real estate faster than a woman could buy a pair of shoes. But I had a lot of background in that. I had a lot of experience in that, so I could make all the calculations and the decision judgments to counteract my need to buy something. I'm looking for a car right now. I hate cars. I don't want to buy a car. I don't want to study them. I just want to know that it runs and it doesn't have any rust, and I'll buy it. And so in some video from now, you're going to see my next car. You know, I had the tank before. I showed you the tank, the 2003 Subaru Forester that I had. It's not a Maserati. I don't need that shit. I just needed a car to get me to the grocery store or to the liquor store to get red wine, or to the dump, to take the dog down and do a dump run. That's all you need it for. I don't need a BMW to do that. So I'm going to go out and I'm going to look at the car and I'm going to go, here's the money, let me have it. But you can't bring that to your trading. In most cases, most traders and most trading educators are long-term focused because there's less technical chatter on the charts in the longer terms, and so they justify what they're doing to trade on the long terms, and they look down at us who are day traders as cowboys. And yet, if you have a personality that's action-oriented, and you go up and try to trade on those charts, you're going to screw it up because you're not going to be able to follow the rules that a long-term trader needs to follow. If you have a short-term personality, if your psychology is based around that kind of observation and action, then you're not going to be successful up on the higher time frames. You're going to have to look at day trading, or at least swing, which is, you could short-term swing as opposed to long-term, and trade maybe a couple of times a week or once every couple of weeks or every few weeks. But if you're action-oriented, that's a psychological state that you have, as opposed to being patient and waiting for trades to mature and then taking it and sitting there and waiting with the trade for 2 or 3 days or 2 or 3 months. You have to identify that. And Douglas points that out in his book, but I want to focus in on that, because if you're trading the wrong time frame for who you are as a person, you're doomed to success right off the bat, regardless of what a win-to-loss ratio you have or think you have, or whatever your system is that you're using, or using a robot, or whatever it is that you're doing. You're not going to be successful. You have to understand what time frame works for you. And then you got to figure out if you can write a trading plan that makes sense based on that. And I'm going to just use my example because I can't speak to the long-term traders. I've lost all my money because I sit on the long-term, I did long-term trades. I was doing carry trades. I consider anything over a few days to be long-term for me because of my personality. And I wiped out of my account because of that. Maybe because I didn't give it enough time, or I was using the wrong strategies, but I just fucked it up really badly. I've tried to improve that now. I'm having trouble with the mini accounts, and I've gone through my struggles on that, because yes, I can trade those very quickly, but the dollar amounts don't add up. So I have to change my thinking in doing the long-term trading. I was trading for, $400 or $500, and I'm levered up on that too. $400 or $600 on a win, or $1,000 on a win. I come down and I trade a mini lots, and I'm trading, and I'm looking for a daily total of 20 pips or something. It's $20. It's a pizza. It's that type of trading is not consistent with my personality. And you take a lot of people that don't understand that psychology, and they look at you and say, well, you're fucking stupid. It's simple to change. You just have to do X, Y, Z. Well, guess what? I can't do X, Y, Z because it's not my personality. You know, a very gifted artist can use all kinds of mediums. They can use charcoal, watercolor. They can use dog turds. It doesn't make any difference. They're going to be able to paint well with all the different kinds of medium. But most artists are going to specialize. They're going to be a watercolor painter, or they're going to be an oil painter. My wife is a professional photographer, and her expertise or her personality is not interested in taking pictures of mountains or tourist shots. She wants to take a picture of a flower or a butterfly or a blade of grass. And if you just let her out loose in the woods on her own, I've walked with her to watch her. You know, she doesn't take pictures of the mountain. She's taking pictures of a leaf curled up in its brownness and its crispness in late fall. That's what she's interested in. And so that's her personality. Well, what are you going to do? Are you going to have her go and take photographs at weddings? She's not interested in that. She'll take small group wedding photography, where she can focus in on 1 or 2 or 3 people and she does beautiful work. But put her with 30 people in a wedding group, she has no interest. She won't do them. People ask her all the time, she won't do them. Not interested in that. And I'm not interested in doing long-term trading. Just as you are probably out there thinking, well, I'm not interested, you're not interested in doing short-term trading or day trading. But those are not right or wrong choices. They're choices that we make to match the psychology that we have. So if you're up there as a long-term trader and you don't understand your psychology and you're not as successful as you should be, maybe you ought to consider reading Mark Douglas's book and considering and finding out what is your psychological profile. You may find that you're more able to do short-term trading, day trading. You might even find that you're a scalper, you know, in and out, maybe 40 or 50 trades an hour. You know, Tom Sosnoff of Tasty Trade, who, you know, built the Think and Swim platform, he trades 40 times a day. 4,000 trades a year is what he does, or 6,000, whatever it turns out to be. Because that's his personality. And also, he has a tremendous number of data points that he can be very successful because he knows what his win-to-loss ratio is. He knows what he's capable of doing. And he just bangs it out. And you take a long-term trader that makes 5 trades a year, and they make hundreds and hundreds of pips when they are successful and end up at the end of the year with a nice profit, and they look at him as a crazy man. And you listen to him, and he says the same thing. Trade small and trade often. That's what he does, and he's successful at it. Well, what are you going to do? I mean, I can't add anything to Mark Douglas's book. All I can tell you is your psychology is driven by your fears, your hopes, and your greed. And you need to understand those 3 components as to how you manage them and interact with the world around you. Don't even think about the trading. How do you conduct your life? What do you do? How do you behave as a person? Because that needs to be reflected in a trading plan that you develop and supported by what you do when you're bid asking. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.